and welcome to Trading Growth and Value Stocks. My name is James Boyd. Alongside with me, my good friend Brent Moore is in the chat, fellow instructor. And hello and welcome to all of you here today. We've got Ocean Life, Riceberg, Amanda, Elena, Jay Richardson, Lena, Life in the Fast Lane, JP, and many others. Welcome to all. Trading growth and value stocks, that's our goal. It's not buy and hold or buy and mold. We're going to be talking about getting in and out some stocks that have some technical patterns, but also with some fundamentals as a foundation as well. Now, today, just real quick, as we're going to spend some time talking about growth stocks. And we'll also kind of mention a little bit on income as well. Now, just real quick as we get started, remember the information here is provided for general informational purposes only. Schwab does not recommend the use of technical analysis as a sole means of research. Technical analysis is interesting, sure. But there's other things that equally interesting, like fundamentals, intermarket analysis, macro, and it can all kind of tie together. And it's actually kind of fun when you start to see the market, the investment from different angles. Also remember that the paper money software is for for educational purposes only. And also remember that you can download that right to your computer, or if you want to use the mobile as well. Check that out. We also have a web-based version if you don't have your computer with you and you're traveling. Also, a quick reminder that when we talk about, let's say, some dividend stocks, remember that those stocks or companies may reduce or stop paying dividends. They could also increase them. The dividend typically is tied to the profitability of the company, typically, not always, but just know that it's not guaranteed to stay at that level indefinitely. Also, remember that investing in stocks involves risk, including loss of principal. Today, we'll talk about kind of the Fed's reaction, Fed announcement, and the market's reaction, and kind of what's moving post the announcement from the Fed. Now, from the last I saw, they should still be in the Q&A portion of that meeting. The Fed actually stayed with the current rate. Now, just real quick, as we talk about that, so Fed Jerome Powell kept the rates where they are. The one thing that we would have to say is that they have been very consistent. They did not raise rates when inflation was taking off, and they have not cut the rates, okay, on the backside. So if we kind of had to give a score, we would say the Fed is very consistent once they make a decision and entrench themselves, okay? Now, it's not just the announcement, it's actually the reaction typically from the Q&A. So if I pull up this chart for just a moment and I take a look at, let's go SPX, and let's just kind of take a look and see what we have. Now, from the initial reaction from the Fed, it didn't really do anything. But if you actually kind of look at where we are here, we're down 20 points, okay? I'm pointing right there, 20 points. Or in other words, down 0.3%. Now remember, the whole moving averages that I have on the chart, they're more sensitive, okay, to the price action. If you kind of want to see something where it's a little bit more intermediate, just go back to that second to last chart there. That's going to really be your 10-day exponential, the blue line, and your 30-day simple. It still tracks the price of the stock more closely. It's a little bit more forgiving. When we go back and take a look at here on the SPX, we are sitting right on the 10-day exponential moving average. Now, so the SPX reaction, slightly down, not breaching the 10-period moving average. I think if we kind of looked at this and said, what don't we like? We don't like the 10-day exponential is kind of bent a little down, okay, a little bit. Could there be some profit taking on some positions? Now, we're coming into a number of earnings here as well. You got Apple, you got Amazon. And really, Thursday and Friday are going to be big as far as, and they can also influence the market as well, right? So kind of coming into that, and some investors might profit take going into that. And this is where the stops is key. What's your idea as far as earnings, et cetera? And we got an example of Hood, and we'll come back and look at that in just a moment because they announced this afternoon, okay? Now, I want to kind of, and we'll come to Hood on our first example. Now, when we look at, let's say, the NASDAQ, when you take a look at the NASDAQ, and these are the trend candlesticks, I'm not sure if this would be the Guinness Book of World Records, but remember, the trend candlesticks, that's what these are. And you're going to notice that it's been green. Let's just say it's been green for a couple days. If the price is above both moving averages, not at resistance, you're going to get a green color candle, okay? And if we look at that and say, did we breach support? No. When we look at the semiconductors, okay, if you take a look at that, that did actually make a brand new high as well. NVIDIA, okay, has continued to push to the upside. And that's probably a company that you've been watching, because if you like to trade momentum, that has been an example of momentum, okay? You do not need to create a special watch list every day. You might look at the ones that are just in the indexes, okay? Because that's where typically the volume is anyway. And if you're looking for volume on the stock or the derivative, that's probably where it's at, okay? Now, probably the biggest takeaway that we would say from today is when you take a look at, let's say, something interesting, we saw the dollar today really have a pretty big move. We have not seen the US dollar go up like this for a while. We saw the GDP number today over 3% or 3%, better than expected. And we also saw probably some commentary from the Fed that maybe, and I haven't seen because I'm here, but the way the market is reacting, it would make you think, let me know in the chat, that the Fed is not giving the information out that they're so sold on cutting 1 or 2 times at the tail end of the year. Let me know what he said, but that's kind of what I'm guessing, based upon the reaction of the US dollar, based upon the reaction slightly of the market. Not big down day, but it kind of seems like the Fed is not tipping their cards, so to say, and saying, yeah, we're going to just cut rates 2-3 times, or even 1-2-3 times at the end of the year, and they're not telling us that. Let me know in the chats what he said there, okay? Now, the one thing I want to do, pull up, is if we kind of said, was there a sector that was kind of a standout here today? If we said, hey, what sector was a little bit more of a standout here today, we'd really have to say IXU. Now, I am using the index. You might use a different product. The utilities has really been an area that is actually kind of, normally it tends to be more in focus when the VIX is low and increasing. Now, the VIX is low is increasing. That must mean that the market was actually to the upside. And obviously that's been the case. Keep an eye on utilities. I want to come back to that area in just a moment. Okay. Now, so that's kind of the biggest standout. The other thing that I would say that we're going to also keep an eye on, now remember, if the GDP was better than expected, and a lot of investors have been so fearful in terms of, let's say, tariffs and economic weakness and things like that, well, a lot of people thought maybe the consumption of oil was going to be lower. If the GDP is better than expected, and maybe they said, hey, the consumption might be higher than what we thought. Notice actually crude oil actually coming back to the upside here. Keep an eye on some of those oil stocks. I want to go look at one of them as well here, okay? So let's kind of get into the meat of what we want to discuss, but I think those are some of the things that stood out to me. Now, I'm going to go back to a stock because we need to talk about this. We have Hood that actually has earnings here today. And there's the earnings. Now, I want to kind of talk about this. And I'm telling you, there is a complete backwards thinking on this, okay? And I want to try to see if we can't, understand what is going on. A lot of times people think that, oh, it's, let me kind of just paint the story here, okay? So now, why are we even talking about Hood? Well, because we did probably 3 or 4 examples of Hood. We have shares in the paper money account in the IRA, 33 shares there, okay? If we go to the margin account, you're going to notice that, for example, we go to that, we got 24 shares there. So we really had, probably, those are only the stock positions. I'm not showing you the other ones. So those are just kind of the stock positions. And here it is today that we have earnings. Now, we know that the risk with earnings is you could gap up, which would be good if you're long, but it could be bad if you gap down and you have a stop and it actually, the stop is not triggered because it actually maybe gaps down in the after hours, pre-market hours, and the risk is maybe more than you think it is. I think if you understand a stop, you we would all say, okay, the risk could be a lot more than we thought it would be. Stop doesn't guarantee anything. It's an order to sell with you don't know what that price is going to be, okay? If you don't like that, then come to the other classes we talk about some strategies there. Now, I want to kind of give us a backdrop, okay? So when you look at, let's say, Hood, where was Hood on the last earnings? Well, Hood on the last earnings, I'm just going to say Hood was at $50, okay? Now, what happens is investors, if they decided from that last earnings, okay, now we've had lots of days in here. If investors think the earnings is going to be good, they buy the stock. If investors think the earnings are going to be good, they buy the stock. They think it's going to be good, they buy the stock. They buy the stock, they buy the stock, buy stock, buy stock, buy stock, all the way up the hill. So a lot of times where investors get this wrong, they're only thinking about the reaction over here. They're only thinking about what happens on the right-hand side. What they're failing to understand is people have already got in. They've been in. Now the stock went from 50 to 105. And I want to catch and see if you're paying attention. So the stock has gone up 50% since the last earnings. Let me repeat what I just said and tell me what I said right or wrong. The stock has gone up 50% since the last earnings. True or false? Well, it's at least 50%. Stock is up over 100% since the last earnings, okay? Now, the example I always like to kind of give here, you got a farmer. And a farmer actually has a farm. They actually borrow money. They actually borrow money to buy seed. They borrow money to buy fertilizer. They borrow money to actually, let's say, have the tractors. They actually get the labor. They then go out there and plant the seed of corn, thinking that the crop is going to be good. Now, at the end, a couple months later, corn 6 feet tall. The ears of corn are so big if they don't take them down, they're going to fall down to the ground. What did the farmer do all that for? For fun? They just like to live out in the country? Why did he or she invest? And the answer is money. And that farmer has fixed costs, variable costs, and he probably has loans associated with that. He has a cost of capital. And that's the same thing with these investors out here that actually bought the stock on the upside. They were probably trying to actually get a rate of return, okay, for any specific reason. So what happens is when you get to the earnings itself, this is when you tend to get there's higher volume. So if investors who have a big position, if they want to sell, it doesn't even matter what the earnings is. They're going to tend to sell on the earnings day. Because if they want to sell a bunch, they could actually probably try to sell a lot of shares, and the market might be able to absorb it better. Okay? You go back and look at on any stock in the last 4 quarters, go check the volume compared to the other days. You get the volume spikes on earnings, right? Now, if you take a look at this, I want you to kind of think about this. Let's say the earnings comes out and it matches expectations. Great, but investors already got in. Let's say actually Hood has great earnings and the stock goes down. Why does it do that? Well, it's just actually matching the expectation. They already bought along the way thinking it was going to be good. Okay, do we understand that? Now let's say, for example, the stock actually matches expectations or beats expectations, and this company raises the guidance. What did you just say? Raises the guidance. Now, does that mean that some people that bought at 50, 60, 70, 80, 90, 100, do you think they might want to maybe try to sell some? Well, they might try to sell some. Why? Well, because if you ain't happy at 100%, I don't know when you'd ever be happy. Fair? Now, if you take a look at this, they might say, I'm going to sell some because they want to get paid for the time that they actually did. But the other thing is they might say, hey, with some of it, I'm going to actually try to see if it can go higher. Now, let's think of it like this, okay? I want to imagine I'm the employer, you're the employee, okay? And I tell you, hey, I'll pay you $50 an hour, $100 an hour, and you do the job, and I give you the check, and then you cash the check. And I say to you, wait, I thought we're partners. I thought you're the employee. You like working here. Why are you cashing the check? And you say back to me, so I can get paid for my time? Well, it's the same thing with investors here. They're trying to get paid for their time. They're trying to get paid for their cost of capital. Okay? I think the biggest takeaway is a lot of people think like the company had good earnings. Why did the stock go down? Just go ask a farmer why they cut the corn down. And he's going to tell you, because I'm up to my eyeballs in debt and I got to pay the money back. And I got to, so unless I cut it down, I couldn't pay my bills. Okay. And there's some similarities in these analogies that I'm giving. And so hopefully it's helpful to kind of give some context. The biggest takeaway is if the stock, let's say, raises expectations, okay, and they did good in the last year or quarter, does that mean that some investors who got in, that they might not sell? No, they absolutely could. So we don't know what everyone's intentions are. Does that make sense? We don't know what their intentions are. That's why we're trying to find companies that actually have strong fundamentals that could increase the chances that there could be a positive outcome, okay? And it might kind of lure, is the word I'm going to use, investors to maybe not sell all their position, maybe sell some, because I know you got to pay the bills, right, for some businesses, but maybe try to get some of those investors to stay in and maybe buy a little bit more over time, okay? Now, the biggest actually thing is, Pia says, could you discuss the rules for earnings? Well, so here's the deal. When we talk about stock position, you don't really have a whole lot you can do outside setting the stop. If we set a stop, which we did, it really kind of comes back to is you just hope you don't get stomped out. So Pia, that's not a great answer. That's why I talk about the strategy that starts with the C, ends with an R a lot, because the investor doesn't like the risk of a gap down. Con about that strategy is you need 100 shares, okay? If you have a big account, you're not worried about it, okay? Now, let's kind of go back to just real quick. So on Hood, in our example, we're going to show the example of holding their shares over earnings. The risk to that, the risk is if this gaps down, this could be ugly. Now, I want to kind of keep in mind that there's after hours trading. I've shared with you a couple times that video I did on after hours trading. Keep an eye on that in the after hours, okay? So that's one. I just want to kind of point that out. I also want to give some context on earnings in general, okay? Because you see a lot of comments on some of the things we discussed. Now, I want to go back to just real quick, SMCI, okay? Now, SMCI is another one where we've actually had, let's say, now why are we talking about this, okay? So SMCI, we have a position on it, and we've been really riding that stock on the breakout. It has earnings upcoming, okay? Now, the reason why I talk about that strategy so much in the last couple of weeks is we're now into the, we're in that tornado, and we're in the eye of the storm right now, to say the least. So pretty much almost everything we look at we're gonna say, well, I got earnings next week. No kidding. Now, the biggest thing that I'm gonna kind of point out here is this has been a stock, if we take a look at this, and we might try to look to add to this position, it's reversed. Now, some of you don't like brand new highs all the time. You might like stocks, for example, that are reversing after being sold off and maybe starting to break resistance as well. I want to go back to SMCI. Let's say the investor said, you know what, James, I want to buy the shares of stock. Now, if someone said, James, I'm going to buy the shares of stock, is it prudent to just buy a full position? What do I mean by that? Let's say you normally invest $5,000 and you got earnings in 2 days. The risk of that is you could have these more volatile moves, right? And you could be nicked out on the stop or just stopped out. What some investors do is they say, look, I'm just going to do a half position. And if we get past the earnings, 2 trading days past the earnings, 3 trading days past the earnings, and that stock is still in the upward trend above support, then that stock is showing a setup for an entry, they might say, I'm going to add to the position. But I think when we talk about PIA and the rules, that's what some investors might do. I'm not going to do a full position, because if the investor does a full position and that stock goes adversely down, we don't know who might sell. It could push it down, stop out, lock in the loss, and then yo-yo right back to the upside. A lot of people don't like that, okay? That's why I've talked about what I've talked about, okay? But let's kind of imagine the investor says, I only do stocks. Okay, fine. Let's say we actually come into this. How much capital is there to work with? There you go. What I'm now going to do is going to come down to, let's say we normally do about 6,500-ish of capital. Let's say we only do 3,250, okay? What we're now going to do is if we take 3,250, it's going to be 53 shares of stock. Now, what we're going to do in this case is if we went back on this chart and we kind of actually said 3-year weekly chart, we really have a resistance right at 51. And then we really have, let's say, a resistance, the next level, right at about $61. Now, if we take a look at this and say, okay, 61 being the next level, 61, we're going to put that target right here, okay? So, we're going to put $71 as far as the resistance, day to GTC, okay? And now if we look at the stop, we're going to go day to GTC as well. Now, here's what a lot of investors think. Well, there could be a negative earnings reaction, hence I'm going to set my stop tighter. Not really sure if that's the greatest idea. If you know that it's going to be more volatile, many investors might say, look, I want to give it a wider stop. They might choose a smaller position to begin with, and they might try to give the stock some wiggle room. Now, there's been some gaps to the upside lately. We talked about gaps the other day. This gapped up, not down. And if the investor said, look, I want to try to give it some room, they might say, James, I'm going to set my stop underneath 5250 and put it right there, okay? So setting stops is not necessarily always the greatest idea. We're going to go less 3%, and if we do that, it's going to be 5092. Okay, so I took that level, about 50, well, there it is, 52, okay, less 3%, and now there's 5092. Now, if we went back and did this and said, okay, where's that stop? 5092, we type it in. Now, let's kind of go back to the comment that we said before. Well, when might the investor add the other half? Well, if we get past 2 trading days after earnings at a minimum to 3, the stock is still in an upward trend above support, and they're showing a setup, okay? The investor might say, I'm going to take the remaining capital and add to the position. Here we start with a smaller capital base, give it some more fluctuation, and see if it can't move to the upside. Now, remember, SMCI, it's been one that kind of had some irregularities, to say the least, but it's actually gradually been moving back to the upside, sitting on some decent unrealized profits right now, trying to see could it even go up higher. Remember, with the stop, there's no guarantee the execution price. What it fills at will be where the stop is. That's called the activation price, okay? Now, what I'm going to also do is, let's go back to this and I'll fix that. I'm also going to bring up, for example, let's go to NRG for just a second. Now, if we looked at NRG, this is a different looking chart, right? SMCI was something that was coming out of a bottom, okay? Or had been, just recently broke out. If you look at NRG, what you're now going to notice is on the 3-year weekly, this is what we really see, okay? Now, if I said to you, is there any type of price pattern on this chart? You might say back to me, what? Okay? Now, I'm looking at the weekly chart. And it makes sense to actually look at the weekly because sometimes you can see these support and resistance, the trends, right? Momentum, etc. Also on the weekly chart. If we went back and really looked at this on the weekly chart, you're going to notice that we kind of have a classic resistance right there, classic support. I'm drawing from bodies of the candles. And if we were to look at this, there's a fairly good sized pull. That pull right there is an $82 pull. Now I'm not getting my expectations up. I know some of you are thinking, man, at 82, Look, that's just kind of like where it went to. That's not a guarantee it's going to do that again, okay? But what I'm going to do is let's kind of go to the fundamentals for just a second, okay? So there's the move. Where was this on the last earnings? Just last, okay? So the stock was at 120, okay? And then the stock currently, now by the way, if you're not good with percentages, you can just go from there, okay? And just draw a trend line to there. So from last quarter to currently, 38.93%, okay? Now again, JP, and I want to kind of focus on you, my good friend. Do you think any of those investors might just say, you know what, I'm sitting on some good unrealized gains. I want to try to make something, right? Well, and remember, that's just since the last quarter, okay? Now, speaking of this, I want to add this just real quick. Let's go to volume, okay? And if I look at volume, let's kind of just look and see if we can't notice, and I'm going to change this to not 50, but 30, okay? Like a 30-day average volume. So remember I kind of said before, when we see these spikes of volume, okay, there it is. Okay, you got one there. If I back this chart up even more, where was the last earnings before that? That wasn't the biggest spike we've ever seen on earnings, which sometimes is good, that when the stock actually goes down, there wasn't a huge spike. That one right there, there's earnings again, pretty high, not the highest, and you're going to see that back there. So you're going to notice that on these earnings, okay, they're normally in the top 10% of all the trading days in the last year typically, okay? And the most recent was right there. So whether you wanted to buy or sell, that was the number one day to do it of the year. If we're talking about being able to sell and sell millions of shares, hundreds of thousands of shares on that day, okay? So that's why a lot of investors, it's not just about what was the earnings, it's about what is the liquidity if they want to buy or sell. Now, what I'm going to do is let's go back just real quick to the Analyze page. Let's take a look at this. What do they do? Well, it operates energy and home services. You're now going to see that it actually does electricity. Now, that's a big thing because when we just talked about utilities, right? So we're talking about generating electricity. Now, I want you to kind of come up and take a look at this. This is not your typical company in the electric space. It kind of does bounce around a little bit. It goes from 2 to 8, 8 to 5, 5 to negative, negative to 4.99. So this is probably not your classic utility company here, if it's bouncing around like that. Now, if we look at the sales per share, it obviously has had something different happening here. Went from 36 to 110, 133, 126, and 132. Clearly, this kind of reeks a little bit of like, did they buy another company and combined, okay? Normally, you do not see jumps like that at all. Now, what I'm going to do is when we come back to this, let's say the investor said, look, earnings is coming up right on the 6th, so next Wednesday, and this stock is trying to break out of resistance. Now, we're going to focus on two stocks in this space. This one's saying it's being more a little home electricity, and we're going to look at CEG. Now, what I'm going to do is I'm going to right-click on the chart, and a lot of people ask me sometimes, where's the higher low? Well, if we actually make like a higher low, that actually means that the stock pulled back. Okay, let's let that sink in. The stock made a higher low, that actually means the stock pulled back. Well, what color candles are pullback candles? They're red. So I'm going to kind of just mark this point where that lowest red candle is. Now, the higher low means it pulled back and it started going back up again. Well, if it started going back up again, what color are the candles are those? They're green. Well, so that's why we always kind of talk about identify the candles where you see a red and green candle side by side. The lowest red candle signifies where that lowest pullback was to. The green candle signifies where it started to go back up. So that we're going to mark this chart right there at right about right there. Now, when I flip this actually back to not the price as a percentage. We're going to say, okay, where do we see the support level? We see it right about, probably about 157. Now, if we actually do this, if we right click on the chart, we go down to buy custom, we go with OCO bracket, does everything have to have a target on it? Not necessarily, okay? What I'm gonna do in this case is I'm gonna take that 157 threshold, 157, okay, less 2%, and it's gonna give us 153.86. Now, if we take 153.86, okay, stop day GTC, and then we go back in position size, just like we were doing earlier, it's going to give us about 19 shares, okay? Now, if we pull this up and say, well, the target could be, well, that's where we're going to type that in there, and we're going to go back and take a quick peek at this and say, where do we think it could be? Now, we already saw the poll, right? Some investors might say, James, that seems a little much, okay? Now, sometimes you might have to go back and say, has this been higher over time? And the answer is, it has not. But notice on this, why might the investor be trying to look at this? Well, it's had a rally, but it's consolidated a little bit. And whenever you kind of have these type of kind of rallies and consolidations, you might be thinking about, I might use the Fibonacci tool, which is really like looking at the math, and it's looking at ratios of numbers. If we take a look at this and say, look, this is where we went up to body-wise, this is where we went down to body-wise, and if we said, where might that 161 extension be? It's really going to be about 208. Now, that's not saying it's going up to 208. That's just using the ratio and expressing it in terms of a dollar term now. Now, if we take a look at this and said, James, that seems a little much, someone might say, James, if it even went up half that much, just midway to that target, that might be initial stop. That might be where the higher high is before the pullback. So some technicians do that. They'll say, look, that 161 extension seems a little ludicrous, pie in the sky, okay? Wonder if it even goes there. Could that reward risk ratio, if you use that, could that even work? That level that I'm pointing at is right at 186. Now, if we come back to 186, what you're now going to notice is we're going to put the target right there. Now, if we take a look at this, and I just want to verify this, okay? What was that level? I think it was like what? 157? I just want to verify that stop. Yeah, that's right. So it's 153. So it's really like, well, it's about 11 bucks, 12 bucks, about 11.70 to get actual. It's about 11.70 per a forecasted upside of about 31, okay? Now, if you take a look at this, we don't know what the earnings reaction is going to be. This is why some people don't like to invest in stocks. Now remember, Connie on Monday talks about ETFs. We talk about why some investors like ETFs around earnings. Kevin and I also on Friday morning, we also talk about ETFs. Someone does not have to just be in stocks. They might say, I'm going to do a product of trying to buy a basket of stocks. But if someone said, look, I don't do derivatives, I don't do ETFs, I'm doing stock, okay, that's when the investor might say, I might consider doing the trade, but I want to kind of really make sure that the position size is maybe not a full position, just in case the position doesn't go as expected. Now, what I'm going to do is confirm and send. And now what we're going to notice is to get that trade filled, we're going to go there and we're going to send the order. Now, one thing I want to kind of do just real quick before I go to questions, I want to kind of just show a couple stocks that some investors might be kind of looking at. Now, one of the other stocks that's in that space, Constellation Energy, if we go back to analyze for just a second, we take a look at this. What you're now going to notice is something that kind of has also that upside potential fundamentally. You're going to see that another company that's been out there, CEG, Constellation Energy, and it produces and sells energy. What type of energy? It does electricity, natural gas, energy-related products, etc. And it also does wind, solar, etc., and hydroelectric assets. Now, it's selling it municipalities, cooperatives, commercial, industrial, public. Did I say everything? Residential consumers. So it looks like it's a little bit of everything. Now, when we look at the sales per share, That's actually gone up. It's actually gone up a little bit. What has been kind of standout has really been the earnings per share. That's been a standout. Okay. Now, the biggest actually thing is, now here's what we got to remember. Not everyone likes the same type of investments. Okay. Some people might like growth names. Okay. Other people might say, look, I like kind of more some income related type assets, etc. And the last one, just real quick, that I want to kind of just look at real quick, and I'm going to do this one faster because we can, but it's going to have some correlation, of course, to NRG. Now, the first trade we did was we did SMCI. Second trade we actually did was NRG. The third trade we're actually going to look at here is CEG. Okay. Now, what I'm going to do is I'm going to right click on this chart. Now, what you're going to see is we kind of have like a cup, and I'm not sure if I'd say it's a handle. At least on the daily chart, it doesn't quite look like that. You could say it looks like an inverse head and shoulder, but it's a prolonged shoulder. I think this is where sometimes the weekly charts kind of make it look like it kind of takes out some of the noise. And this is what I mean by that, right? You get a run up in the price, pulls back, run up, and then it kind of drops down. So I think you could kind of say, look, on the weekly chart, it kind of looks like it has higher lows, if you will. And it's really pressed on that 302 a little bit. And we're right up near the resistance. If you want to call it the rim of the cup, I'm not going to argue with you. I would never do that. Now, if we take a look at this, let's say the investor says, James, I think there might be upside potential to this, and they want to actually set a stop below. We talked about the risk of the stop, okay? And what I'm going to do on this, a little faster here, I'm going to set the stop underneath the moving average. Now, I want to go back to, some of you might say, James, I don't use the whole moving average. I use like an exponential moving average or a 20-day moving average, maybe a simple moving average. If we kind of said, hey, we're going to set a stop below the moving average, where's the 10 period? The 10 period moving average is at 327. The 30-day simple is at 318. So if we took, for example, given 326.55, let's do this faster, less 2%, it's going to give us a stop at 320.09. Now, if I set that stop there, 320.09, you're giving it quite a bit of room here. Why are you doing that? We talked about that, right? We said, hey, look, you set tight stops over earnings, there could be an increased probability of being stomped out. And it might be maybe artificially so. And a lot of times you just can't handle that volatility on the price. Now, if you go dated GTC, the target here, if we go back to this and kind of said, okay, where's this up? I mean, if we kind of fib this, if you will, and let's go back to kind of that 161 extension. So whenever we see something that, now I'm not going to take it from the very highest point because it's going to give you a higher extension. We're going to kind of draw this from where we see more touches. If we draw it from there and we go down to, let's say, not to the very low, because it's just going to give you a higher price projection. If we went, let's say, down to where we got more touches, and what this really has to do with, are you drawing lines from outliers? Or are you really drawing lines from where you're getting more touches? That's the whole point. So now remember, if you draw a line from the outliers, the highs or the lows, you get wider projections, up or down, right? Now, if we take it kind of from resistance down to support, that 161 extension is 400. If we said, look, that seems a little pie in the sky-ish, we kind of set a target maybe, and by the way, could you maybe put like a 132 on here-ish or 131? I don't see why not. So what I'm going to do is I'm going to take this one off, and I'm just going to type in 131, okay? And what that's going to do is it's going to give us a line right there. So we don't have to kind of play with the numbers. It draws it for us. Just right-click on the Fibonacci line, edit the properties, and you could just take the 261 off and type in, let's say, 131, okay? There you go. So we're going to put the target right there at 360. Now, we're not saying that's all it's going up to if it even gets there. We're just saying, look, that's going to be our first target. Now, notice we're trying to be a little bit more forgiving to the downside on purpose. And we actually have, now you might say, James, I'm going to set my target higher. The sweet spot of these examples is really like 2 to 3 days to 2 to 3 weeks. That's really what we're looking for. Okay. Now, what we're going to show in this example is going to go confirm and send. Remember how that stop works. Now, I want to kind of go to some questions. And what I'm going to do, let's kind of go to a question or comment that Josh actually says, which is an interesting question, okay, or comment. Josh actually says Oklo, OKLO, has an $11 billion market cap with 0 product delivered. You know, welcome to an IPO, right? I mean, a lot of times you get IPOs or early stage companies. They haven't produced the product to a point to actually sell it per se or deliver it. That's why a lot of examples we look at are larger caps where these are not products or services that are in the earlier stages. They're actually being sold and recognized as sales. Now, what we're now going to go ahead and do is send that order. Man, so I'm going to have to fix that. So now we've actually seen, let's verify that. Now that should have filled, okay? But I'll take a look at that. Now, other stocks that I want to kind of just look at for just a moment, okay? Now, we know that NVIDIA, I'm just going to fast fire through a couple stocks, okay? NVIDIA just recently, in the last couple days on 7/24, moving average went green again. Today being a crossover, okay? So today kind of being more of the confirmation. The investor does not have to wait until that happens. They might say, James, I'm just looking for both lines to be green. That happened on 7/24, 7/25 for sure, and so on. Today being more of the confirmation. 2 stocks that we're going to kind of keep an eye on in this space. If we had a little bit more time, we see Micron falling down to the old resistance area. Now, falling down to the old resistance area, lo and behold, what do we see on the chart? We see a crossover. 1. By the way, 2, the crossover happened first, and then the 20-period moving average crossing. Now, this is kind of one we're going to kind of keep an eye on because if Micron kind of goes more in line with NVIDIA, Micron is kind of also at the line of diagonal resistance as well. Keep an eye on Micron. Now, the other stock, for example, and by the way, they're also keeping an eye on it because it's fallen down to support. Now, what you're now going to notice also on this chart, we have not had the MACD be above 0 for a long time. And guess what? To really get through resistance, we're going to need some momentum. So keep an eye on that. Can it breach up through the 114 area? AMD has been another one in that area that kind of has looked more like NVIDIA. If you're someone that likes volume, there has been a pepper spraying of volume. I mean, just all over the place. And it's just so apparent. It's just like, which day do you want to look at? I mean, so this is what investors like. Upward price action and average to above average volume. And AMD, if you like volume, there's a pretty good chance that might be in the paper money account watch list. Now, the other one I'm going to kind of point out just real quick is Google, okay? Now, Google's been another one. If you talk about one that's actually kind of had some higher volume as well, you actually had it on the 6/27 day, you had it on the 7/9 day, you had it about a week ago, even though it was a red candle, you had it actually higher on the 7/25, higher yesterday, and today was kind of more neutral as you had Fed day. That's another stock to kind of keep an eye on. Could that one be kind of coming out of this pullback area? Getting above 190 was substantial, okay? And we know that kind of some companies kind of go through some lulls. It actually has a big V pattern, and that actually V pattern has really led to resistance getting up through the first area, and we only have $5 more to get to the next level. Could that be one that could kind of break out and have some tailwinds fundamentally and technically? Now, the one other one I kind of want to make mention of, just kind of in closing here, we talked about historically Micron quite a bit. Excuse me, we talked about Micron. We also want to bring up Altria. Altria is actually one that is actually outperforming Philip Morris. That actually popped on earnings here today, hit 144 on the earnings per share. Why does that even matter? Well, sometimes the company might raise the dividend if maybe the earnings are better than forecasted, or if they think they're going to be like that going forward in the future. So that's another one to kind of keep an eye on. We would include in here Datadog, DDOG, Dash, and Palantir. Okay, so we did 3 trade examples here today. I want to thank you for your comments. We try to kind of provide some context around the Fed's announcement and earnings reaction, and also maybe how the stock investor might try to manage or put on positions in and around earnings. Now, I'm out of time here. Coming up, we'll have a session on market posture and sectors. I want to actually thank Brent Moores for answering those questions in chat, and thanks to all of you. I'll be back tomorrow on Trend Trading. Follow Brent as well on X and on his coaching classes. He teaches the Great Advanced Concept class on Fridays as well. Now remember, with what we talked about, all investing involves risk, and this has been the class on trading growth and value stocks. Stay tuned for our next webcast coming up at the top of the hour. Take care. Bye-bye.